Hello, thanks for joining us today. Today we have Tate Groome, managing member at Life Trust 3D and author of The Best Policy, and we're here to talk about ILIT management today. Tate, thanks for being with us.
Thank you, Mike. It's a pleasure.
Tate, you're near and dear to my heart. You and I have been together for a long time. You've been the original user of the software, and what you've done and how you've grown with it is very, very unique. So we look to you for guidance here, and we're glad to be part of this journey here. First thing we want to do is, what is an ILIT, Tate? For people that are thinking about it, heard about it, what is an ILIT?
Well, an ILIT, and a lot of times in our industry we get caught in, acronyms, acronym alphabet soup, but ILIT stands for Irrevocable Life Insurance Trust. And irrevocable is the key word in an ILIT, and what it essentially means is for estate planning purposes, an irrevocable trust can be established and can own life insurance, and if that life insurance is owned and monitored properly and administered properly, then it can not be included in the insurer's or the grantor's taxable estate. So from an estate tax perspective, it can provide immense leverage for clients that have taxable estates. But it also can provide a lot of the things that clients want with their estate planning. It provides not just estate tax leverage, but protection from divorce, undue influence, bad decision making. The Irrevocable Life Insurance Trust is an amazing tool unto itself. The current estate tax exemption is very high right now. It's $11.4 million per person, $22.8 million for a couple. The number of lives, the number of grantors that have taxable estates these days has dwindled, but it's still an incredibly powerful planning tool, and one that I think we're going to see very, very much worthwhile and useful.
And what makes Life Trust 3 different than other companies in the ILIT management space?
It's a great question, and when you asked me that question, I've been thinking about it a little bit. But we always say that we are more than a policy monitoring. We're more than a policy review company. With us, you get way more than just a policy review. You have your analysts on the phone with you, calls with the grantors, calls with the trust beneficiaries. We produce dynamic reports and management reports for the managers of the trust departments that we work with. So many of our clients have a few hundred policies, and if we're tasking the trust officers can go through those and explain them to their clients, but a lot of times the management team wants to know what's happening with the policies. We produce a really nice management level report for clients, cover letters for our trust officers that need help explaining what a review actually means. We always talk about a policy. We don't want to just tell someone it's good or it's bad or it's okay. If there's something going on with the policy, we want to help them understand how to correct it, how to turn it from a red light or a yellow light policy in the Proformex system to a green light policy. What are some steps you can take? Can you reduce a death benefit, increase a premium, look for other alternatives? And I think that just the hands-on nature for which what we have built our business, how our analysts and customer service folks are used to working with our clients is hands down how we differentiate ourselves.
I know for a fact you guys do a great job managing ILITs, but what about people that are looking at ILITs? When is it a good time to utilize an ILIT?
Well, an ILIT, let's see. Well, we always go back and we want any estate planning discussion needs to take into account the grantor's wishes, their goals. It has to be a goals-based conversation. And irrevocable life insurance trust may play a part in that estate planning. So, a lot of times it starts with the wealth management, the wealth management person in the relationship, or the estate planning attorney. A lot of times, the irrevocable life insurance trust is something that gets brought into the fold as part of an overall estate plan. It makes sense for business owners. It makes sense for folks that want to leave their legacy, for wealth replacement, for buy-sell purposes. With again back to business owners, or if you want to create if you have unequal distributions amongst your trust beneficiaries, perhaps one child might be working in the family business and wants to create state equalization. So there are many uses of irrevocable life insurance trust. And again, the irrevocable nature of it makes it somewhat, for those those grantors that want to have a lot of control over their policies and all their assets, it does make it somewhat cumbersome. But if it's used the right way, if it's understood the right way, again, it can be an incredibly powerful technique, not just for today, but for future generations to pass wealth.
And types of policies, what can be owned inside an ILIT, and what are you seeing out there for typically what you see owned inside ILITs?
Mike, just like you, we see term insurance, we see whole life, universal life, indexed universal life, variable universal life with secondary guarantees. I do find that the policies that our clients most like trusteeing are the ones with secondary guarantees. Just with markets, with sustained low dividend performance, or sustained low interest rate environment, lower than anticipated dividend scales, changes in cost of insurance charges, we're finding clients more and more just want something that's guaranteed. As long as they pay the premium on time, there is administrative risk to no lapse guarantee policies. But those are the types of policies that we find a lot of our trustees really enjoy having. And now variable life policies and equity index policies can have a secondary guarantee feature, which I think is incredibly important. Gives clients some nice cash value and flexibility, still has this underlying secondary death benefit guarantees. And they're really not that much more expensive than a no lapse guarantee with no cash value. So I think the industry has a lot more competitive type policies for irrevocable life insurance trusts. And then I also say for term insurance, term insurance is something that is so often overlooked. And I think you probably get a lot of the same feedback as we do. Why are you charging fees to monitor a term policy? Well, just this year we've helped, only in April, we've helped 8 different clients convert their term insurance because they've had a change in insurability. They were super preferred non-smoker. I've got a 44-year-old we've helped that was a super preferred non-smoker, and now he's uninsurable. And these are policies that have to get converted based on his old underwriting classification. And term conversion language is vastly different among insurance carriers, and even going forward, Mike, no 2 term policies look the same with a new set of kind of term insurance that's out there. So because so many carriers have gotten burned with these convertible term policies, that the only ones that are converting usually are the ones that do have some health issues. So again, term is just as important. We actually charge the same fee for a term policy as we do whole life, universal, variable. We feel like at the end of the day, if a life insurance pays a death benefit, we've never heard of a trust beneficiary asking what type of policy was that paid the death benefit.
So utilizing ILITs obviously helps with estate planning and personal needs, but why is it so important to monitor these policies? Isn't it just set it and forget it, Tate? Why do you have to monitor them so closely?
Well, it's the exact opposite. And I think the life insurance industry is as dynamic of an industry as ever. However, all the outsiders look at life insurance and think it's a static industry, a static product where you set it and forget about it. So we're always combating and trying to make sure that folks are educated on this. This is a very dynamic product. And whole life, sold back in the 1990s, is not the whole life that we know today. A sustained low interest rate environment does have an impact on even the best insurance carriers and their whole life plans. No insurance company is immune to the sustained low interest rate environment, and dividend performance has dropped dramatically. So that causes grantors to have to fund premiums longer than anticipated, or a greater premium than they anticipated. If they had universal life, then most likely those policies are underperforming and more money needs to go into the policy to maintain the current death benefit, or when you start looking at reduced death benefit options. Yeah. Catching problems sooner rather than later is material to helping the life insurance policy pay the promise one day into the future that the grantors, the folks that set up the ILIT, really dreamed of when they and hoped for when they set the trust up to own the life insurance.
So with these ILITs, they're irrevocable insurance trusts. Who can act as trustee? Why is a trustee needed? And how do you support these trustees?
Great question, Mike. The who can act as trustee? I think there's a joke where you pick the person that has given you the most grief in your lifetime and make them the trustee. But being a trustee is a tough job. There's a lot of liability associated with it. Not always enough compensation for the person serving as trustee. Bank trust departments serve as trustee and are primarily the trustees. There are trust companies that are not affiliated with a bank that serve as trustees. Mike, you could serve as my trustee, or an individual, someone that you're really close to, can serve as a trustee. Aunt, uncle, a brother could serve as a trustee. We call these non-professional trustees, just because they don't have the expertise necessarily that perhaps a CPA or an attorney or a bank trust officer may have in managing and monitoring the irrevocable life insurance trust policy.
And then what is the role of the trustee? What do they need to do, or should they be doing each and every year?
Interesting, and this goes back to certain states treat the monitoring of life insurance policies differently, and certain states have what we call exculpatory statutes that actually protect the trustee from performance-related issues related to a life insurance policy. So I would encourage everyone these are state-specific statutes, and I'd encourage everyone to make sure in your state to understand what the statutes are and what protection is given to trustees. However, even with those statutes, I think we all want the very best performance, the very best outcome for these life insurance policies, regardless of what state statutes state. So I really think that policy monitoring is as important today as perhaps it ever once was before. There are certain life insurance agents that do an incredible job monitoring policies on an ongoing basis for clients, for trustees. But you and me would not be in business if this was the norm. And I do think the life insurance industry runs a ship that insurance agents get paid a large upfront commission, and there's just not a lot of recurring revenue to monitor policies effectively. And really, that's why we are in business. That's why you're in business. And other policy monitoring firms are just skyrocketed in value, even being purchased by private equity firms. I mean, this is a really good business because of the way the insurance industry is.
So, Tate, you've been at this a while. You've reviewed, hundreds of thousands of policies here. What are the biggest issues you're seeing with these policies owned in ILITs? What's a red flag to you, and what do you see in the future with ILITs?
Mike, we are, the number. I'll tell you this: the number one issue we are seeing right now, and that we are educating our clients on, are maturity provisions. The maturity provisions in contracts. What happens to a policy at age 95 or 98 or age 100? Does it continue? Is the cash value paid out to the trust at that time? Those are the types of questions that no one has really answered over the years, and it goes back to the contract. And one insurance carrier may have a few different product types, and they all have the maturity provisions that are different among those policy types. And I always tell the story of Mr. Levin. This was written up in the Wall Street Journal about Mr. Levin escaped Nazi persecution in 1938, came to the United States and started an incredible manufacturing operation. He purchased 2 Transamerica universal life policies in the 1990s, and he paid in, and the total death benefit I think was $3.8 million. He paid $1.5 million of premiums over the course of his lifetime. He turned 100 years old back in September. This was 2017, and he received a check for a few $100,000 from the insurance company and basically said, Mr. Levin, you have outlived your life insurance policy. Here's a check. And that was $3.8 million of tax-free life insurance proceeds that never went to his family, $1.5 million of hard-earned dollars that he never saw back. And he had a check for pennies on the dollar. And I think stories like that, we have to get outside of the box of just thinking life insurance is something on a piece of paper. These are stories. These are real people. And nothing to me kind of tells why policies have to be monitored more so than Mr. Levin's story. So maturity provisions, we are seeing cost of insurance charges increase across the board for a lot of very well-known universal life insurance companies. We're seeing private equity firms swoop in and purchase what I would call distressed life insurance carriers. And what does the future hold? What do private equity firms typically want to do when they purchase a distressed asset? They want to make it profitable, sometimes at all costs. And that could be at the detriment of policy holders and insurers and grantors and trust beneficiaries. I do know there's some private equity firms that have treated policyholders very well. There are others that haven't done as good a job. So those are three things, and I think that the biggest elephant in the room is just the sustained low interest rate environment has put many of the insurance companies that we all grew up knowing the MetLife is, where's Snoopy these days? So MetLife, Voya is no longer selling life insurance in the United States, new policies. Sun Life was just a great carrier in the United States, no longer selling life insurance. So these very reputable carriers just no longer in the business.
Yep. Well, Tate, thank you for your time. Again, we're fortunate to be partners with you. We've been partners for a long time. We're looking forward to be partners in a much longer time in the future. Keep up the great work. And again, we appreciate your time today.
Thanks, Mike. Appreciate it. Guys, have a great day.
Yep.